Hello, and welcome to this week's Motor Trade Radio podcast. Powered by Motors and Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters from across the franchised and independent dealer sectors.
We're into May, Philip, and the sun's out, and there's loads and loads going on in the car retailing sector at the moment.
There is, and another bank holiday as well.
Yes.
For everybody to enjoy. Hopefully, the weather will stay nice throughout this bank holiday weekend. But yeah, lots to get our head around this week again, Curtis.
Yeah, most definitely. And starting with, over the course of the last couple of weeks, we've been putting together a new monthly episode, and we actually shared it on Thursday, and it's with a friend of the pod, Rupert, Pontin, who is head of insight and communications at Brego. And he's looking at trade values over the course of the month. And it's the start of a new monthly series. So it is something that we will revisit at the end of each month. But it was a fascinating snapshot of what was going on in the used car sector in terms of those values over the course of the month.
Yeah, definitely. And let's say if you don't, we'll play a snippet on today's episode. But again, do have a listen to the full episode that was shared on your podcast feed on Thursday of this week and still be available. But again, you'll get to sort of at the start of the introduction there to Rupert and Brego is the type of data and the volume of data that they are looking at on a regular basis. And second to that is the sectors that they look at. So it's not just cars, it's commercial vehicles, it's into that heavy goods sector and into the leisure sector as well. So yeah, lots of detail and data at Rupert's fingertips to try and make sense of. So do have a listen to that. And another shout out for today is a friend of the podcast. And if you did miss the interview, then you missed a cracker with Graham Potts, who's the CEO of Eden Motor Group, as well as being chair of the IMI. Now, recently this week, we did talk to Graham about his expansion and future growth and his partnership representations. And just this week, they've taken on Mazda in Exeter. So he did allude that they'll always look for opportunities, but he's obviously very much in that physical dealer space.
Yes, because when we talked to him, we did actually ask, well, are there any plans to grow with existing partners? And he made it quite clear that there was. He obviously wasn't going to tell us what was the top of the list, but and they will be expanding in Exeter, and that's very much hot on the heels of the expansion that they had with Mazda in February, where they opened a site. Well, they acquired a site actually in Newbury and relocated it into their existing Vauxhall dealership. And what they're doing in Exeter is fairly similar in that they found space for Mazda in an existing Vauxhall and Leap Motor business.
Yeah, and the other thing that just to draw our attention to, you might have seen a little bit of activity on my social feeds this week, but there's been a new forum, a leadership council being formed, which is the World EV Leadership Council. And this is being led by A. Thomas, who is behind Green TV and EV Summits and more current with electric drives. And what he's trying to achieve or looking to achieve is pull together the sort of the global operators, those that have presence across multiple markets, and try and get some of that best practice, think about what they should look at, and rather than local in what's happening here in the UK, but actually is the things you can learn from what's gone on in Europe or South Africa, US, etc. So I was part of the inaugural meeting, and there was a lot of big operations on that meeting, should I say. So hopefully we see more from that World EV Forum going forward, as they try and think about the transition to electrification slightly differently and try and make a global change to that transition.
Well, it's certainly a topical subject matter, isn't it? I think it pretty much touches all the stories that we cover this week.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Motors and Cazoo. If you're a supplier and would like us to profile your business and reach our audience of dealer group bosses, managers and decision makers on one of our supplier special episodes, then get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Companies already featured in our supplier specials include Autoglim Lifeshine, Impel, ETT, Generational, Tracker, MTC and Jigcar. And you can find them all in your podcast feed, along with our recent OEM specials with new EV brands Verizon, Aon and Changan. And if you'd like us to profile your business, then just message us at motortraderadio@yahoo.com.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Motors and Cazoo.
Now, before we get to this week's headline, here's a little extract from our chat with Rupert Pontin, Head of Insights and Communication there at Brego, looking at some of the key trends that drove April's trade values. So Rupert, can you sum up some of the key takeaways covered in this month's Brego Trade Values episode?
Yes, of course, Philip. I think I'll probably start with what we've seen in terms of the pricing movements month on month. So overall, we saw that for sale price, there was a decrease of 0.9% overall in the marketplace. But that was framed in a different way on the basis that we can look at it by years, the age of the vehicle. And the biggest moves downwards were for vehicles that were under 1 year old. And so we saw a drop in price of 6.5% for those. 3 years old, there was a 3.3% drop. And the other big drop was at 12 years old, and that was a 3.8% drop. So that's an interesting view of the market. Conversely, we also saw significant increase in price between vehicles of 9 and 11 years that went up between 1.9 and 2.7%. So I think those are the biggest movements we saw in terms of average sale price. But overall, one of the big things that we need to highlight is that sales performance was down by 17%. So we've seen quite a drop off in sales. And as we walked and talked through the detail of that, we identified that was really down to what's been going on in the economy. And off the back of the war in the Middle East, but basically a concern over the increase in cost of living, which I think is slowing people down in terms of their desire to buy big ticket items.
And within the episode, I mean, we touched on various other areas. We talked about days to sell, we talked about average sale prices, we talked about the fastest sellers, and we also talked about the slowest sellers, didn't we, within the episode?
Yeah, we did. We had a good look at what was going on in that part of the marketplace. So, the fastest sellers for April, the top three were the Tesla Model Y, rear-wheel drive hatchback, the Tesla Model Y long-range all-wheel drive in second place, and the MG ZS hatchback 1.5 Hybrid Plus that came in third place. So those were the fastest-selling cars in April, with days ranging from 19.5 to 25. And then on the other side, there were the slowest-selling top three, and that was the Honda CR-V Estate, the PHEV Advanced Tech version. In second place, the Range Rover Evoque 2-litre ED4 SE, so that's the two-wheel drive version, and they are less desirable, we do know that. And then in third place, we had a Volvo EX30, and that was the 315 kilowatt twin motor Performance Plus version. And those took between 100.8 days to sale and 77.7. So perhaps some surprises there in the slowest selling cars. But I've got to say, and we'll see this going forward, that Tesla quite often have a number of vehicles in the top 10 fastest selling list.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Motors and Cazoo.
I mean, Great overview there with Rupert, and as always, the devil is in the full interview, isn't it, with Rupert, as he goes into a lot of different areas of the data, and that's really only a snapshot of the kind of data that they've got access to.
Yeah, very much so. I mean, he does look at the different sectors, the different price points and fuel types, and it really does, as you say, gives a really good snapshot of some of the movements that influence trade values over the course of the month. So do check out the full episode, which was available on your podcast feed from Thursday. Some of the headlines for this week. We're looking at AM, Car Dealer, Motor Trader, Motor Trade News, and Auto Sunday, which I think is pretty much a full house of the B2B trade titles. So this week's the headlines cover a look at the newly published Cazoo Market View and what their data shows about prices, demand, stock levels in the used car market over the course of April. The FCA finance mis-selling redress scheme is back in the news, with Mercedes-Benz confirming it will launch a challenge. Dealers are upbeat on Q2's sales potential, but remain cautious on aftersales, according to the latest JudgeService barometer. We have the full year financials from Hendy, who posted a £18 million loss in 2024, while US-owned Group 1 delivers a record Q1 performance, helped by after-sales profitability. And we'll finish this week's pod with a look at two major groups replacing Ford sales points with one with a Chinese brand and one with a Korean brand.
You're listening to All the Chatter That Matters on the Motor Trade Radio podcast, powered by Motors and Cazoo.
So the first headline this week comes from Motor Trade News, and the headline is used car prices up in April for first time in 2026, says Cazoo Market View. So this is the monthly analysis from Cazoo on the market trends that it's identified, and some interesting observations here on pricing. So average prices rose by 0.8%, which is the equivalent of £149 month on month to £17,696. And that's actually the first increase since December 2025 and marks a 1% rise year on year. And the growth in, the increase in price was driven primarily by newer vehicles, with prices for cars aged up to 2 years rising by 3.5%. And indeed, older cars also saw gains, with cars aged over 10 years increasing by 1.3%. And prices increased across all fuel types, led by electric vehicles, which rose 5% month on month to an average of £23,305, although they actually remained down 3% year on year.
Yeah, and within the story, it goes into a little bit of detail in some vehicle types as well, and by fuel types. So, the Nissan Qashqai was the biggest price mover, with hybrid models aged 3 to 4 year olds rising 5%, and that was up to 17,850. The Volkswagen Golf remained the most searched for car, while the Vauxhall Corsa continued as the top seller, a position it's held since the March 2025 there. And then if you look at the days to sell, overall, the days to sell improved by 1 day, month on month, to 26 days. Franchise dealers achieved the fastest sales at 18 days, followed by car supermarkets at 22 days, and independents at 43 days. So that's quite a big shift between the franchised at 18 days and the independents there at 43 days.
Yeah, the franchise sector was absolutely storming, wasn't it? And I'm sure that reflects the number of part exchanges that would have come in on the back of the plate change. So those stock levels would have been fairly healthy. So and talking of stock levels, dealer inventories were pretty much unchanged month on month at 53 units across the board. However, EV stock levels significantly fell by 17% month on month to 8% overall. But despite lower availability, EV demand actually remained really strong over the course of April, with searches doubling year on year. So a lot of data as normal, within the market view, and do check out Motor Trade News's coverage, because they do go into a lot of detail, and obviously a busy time for Cazoo as well, because Motors, it was reported during the week, Motors is rebranding as Cazoo, and that actually happens next month, May the 27th. So a lot happening in the marketplace world at the moment.
I bet there is for them guys, transitioning that all into the one location. And talking about a lot happening, we're going to head over to Auto Sunday, and our friend Tristan Young, they're talking about the latest of the FCA redress scheme. And we did say this won't go away. So the title is the FCA redress scheme hangs in balance after OEMs launch a challenge. And this is that the Mercedes-Benz Group has confirmed it will challenge the FCA's motor finance redress scheme. Also, Sunday understands Mercedes is not alone, and the scheme will also be challenged by Volkswagen and the Bank Credit Agricole, which are understood to be asking for a judicial review of the redress scheme. So this year looks like it's going to be rumbling on, because this is on the back of the consumer voice challenge that we talked about on last week's podcast.
Yeah, and we said last week that this won't be going away, and sure enough, it hasn't. This is pretty significant, with Mercedes-Benz confirming that it has appealed against the FCA's proposed redress scheme, and that's really covered within this report. And also in a statement to Auto Sunday, the FCA confirmed it had received challenges from 3 lenders in addition to the challenge from Consumer Voice. So it's starting to build a little momentum now, isn't it? And it remains to see who they are and whether or not there are other OEMs. But as I say, pretty significant that Mercedes-Benz Group is now challenging it.
Yeah, and obviously some of these OEMs will have some weight, I suspect, on the FCA. So again, we did say we would continue reporting on any updates from the redress as it develops. And obviously, from one side of the camp, people just want to get it done, finished, and get people paid out and move on, whereas others don't believe that it's the right solution to their balance sheet. So we'll continue reporting on that one as we move forward. Now, moving over to AM Online, and if you were listening to the podcast last week, we did talk about the first release of the JudgeService research. This is the second part of that research, and this is the dealers upbeat on Q2 sales potential but cautious on after sales. So this is that dealers are confident about new and used car sales performance in Q2, but I expect more pressure on after sales. And so this is according to their dealer confidence barometer that you're involved with JudgeService.
Yeah, so you're right. This does follow the report that we ran last week, which was about how confident dealers were in their business performance, and they were pretty upbeat. More upbeat going into Q2 than they were Q1. So this is very much looking at their views on new and used sales and after sales, and it's based on the opinions of 2,000 dealers. So it's a pretty decent survey. And as you say, I am involved in this. I've seen the data, and what it shows is that the proportion of independent dealers feeling positive about Q2 used car sales actually increased to 44%, up from 19%. at the start of the year, whilst neutral sentiment fell to 31% from 52%. And among franchise dealers, confidence in used car sales remained steady at 50%. So 50% saying they felt confident. Neutral responses fell to 28% from 35%. And franchise dealers' confidence in new car sales also remained stable, with 39% feeling positive, 33% neutral, and 28% feeling negative. So broadly in line with Q1.
Yeah, I mean, there's a quote in here from Neil Ladley, who's the managing director of JudgeService, that says that the results of their latest dealer parameter are encouraging, with dealers showing high degree of optimism for the new and used car sales will perform over the course of Q2. That it suggests dealers do not expect political and economic headwinds to have a damaging impact on buyers' demand. However, he does cite that confidence in after-sales is weaker and more mixed. And that's, as we said, with the franchise dealers, just 22% said they were positive about Q2, and after-sales performance down from 44% in Q1. So, yeah, a bit of a mixed view there of what we expect in Q2.
We'll be back with the rest of the week's headlines after the break.
You're listening to All the Chatter That Matters on Motor Trade Radio, powered by Motors and Cazoo. This is your weekly one-stop shop for all the biggest car retailing headlines from across the medium.
The next headline comes from Motor Trader, and it is Hendy files accounts showing £18 million loss in 2024. So this is the financial year up to December 2024, and that's £18.1 million loss compares to a £7.2 million profit in the previous year on turnover that was down 5% to just over £1 billion. And in the results which were filed at Companies House, the group said it was 2024 was exceptionally challenging, with the suspension of sale of Gap products in February of that year, and a marked deterioration in new vehicle profitability as a result of the impact of the ZEV mandate. And within the story, Paul Hendy, chief exec of Hendy Group, says these figures reflect what has been a very challenging trading period for the company across 2024 and 2025, and for the motor retail sector as a whole. And he does actually go on to say that now in 2026, we're seeing an improvement in performance thanks to the efforts and commitment from our colleagues, and a transformation program that is delivering change in all parts of the organisation. So it's worth just emphasising that this is for the full year ended December 2024.
Yeah, as you say there, I mean, it tells a bit of a story, doesn't it? But they have gone through a significant change, both in leadership and structure of the business. And you know, you'd see coming out from Paul Hendy there, and obviously Duncan McPhee joining the business as well. That although it's not the greatest of readings for 2024 compared to 2023 there, but you know, this is we're now trading in 2026. So it'll be interesting when we see the next financials coming out from the business, as you know, start to see some of the structural and financial changes from that shift and cost base that they took back in 2024 there. So at least, you know, as you said there, Curtis, in the statement and the quotes there from Paul Hendy, a little bit more optimistic about 2026 trading. And hopefully that will start to show in financials going forward and put sort of 2024, 2025 behind them now and move forward.
And heading over to AM Online for another story about financials, Group 1 delivers record UK profits as after-sales powers Q1 performance. So this is US-based Group 1 Automotive has reported record first quarter performances in the UK, with gross profits rising 6.3% year on year to £170.8 million, and very much driven by strong growth in after-sales finance and insurance. And this also reflects the expansion of the group, because it did buy the bulk of the Inchcape retailing business, 54 sites back in April 24, and this is really showing how the expanded group is now contributing to this profit.
Yeah, I mean, some big numbers in there, isn't there? And especially when you take this up to that, the top level there. That they talk about, obviously, that UK performed well in the first quarter, and that's a quote from Darrell Kenningham, who's the Group One's president and chief executive officer, saying that their UK business generated a record revenue across nearly all major business lines and achieved record gross profit in used car, vehicles and parts and service, saying that the UK performance was underpinned by double-digit same store growth in parts and service and finance and insurance, helping offset softer new and used vehicle volume. But obviously, when you go up to that group level, Curtis, it gets a little bit bigger, doesn't it? Because they talk about total revenues for the first quarter reached $5.4 billion, and that was slightly down from $5.5 billion in the same trading period last year, while the net income from continuing operations rose to $129.9 million. So that's some eye-watering figures there, Curtis.
Yes, yeah, and even since the Inchcape acquisitions, the Group One has grown with further acquisitions, and very much focused on integrating all these businesses acquired. And as it says within this story, looking at some of those efficiencies to drive shareholder value, and managing its cost base. But really positive story there, certainly on the after sales side of things.
Yeah, definitely. And as Curtis said at the start, there's been a few changes with some of the dealers that we talk about quite regular. And one of them is in Motor Trade News, saying that Vertu to swap Ford for Geely at Kings Norton dealership, that the site will remain a Ford authorised repairer, obviously to support existing customers, but will transition across to the Geely franchise there. So yeah, quite a big change there, and obviously suspect a big move for the business in dropping that Ford and replacing it with Geely.
Yeah, and I think it is quite significant, because I don't think we've seen many, if any, instances of such a big mainstream legacy volume player as Ford being replaced by one of the emergent Chinese brands. And this could this could be the start of a trend, as dealer groups review their portfolios, look at some of the legacy players, and look at some of the Chinese propositions, and taking them on. And within this story, Robert Forrester, friend of the pod and chief exec of Vertu, said, "We're delighted to open our new Geely dealership in Kings Norton and to further expand our Geely network following the successful launch of 2 sites in Scotland." And he goes on to say that Kings Norton is the perfect location to open this dealership, with David Cox and his team having been recognised on a number of occasions for their exceptional performance. So very much a strategic choice there. And I think it's going to be fascinating to see how Geely grows within the Vertu business as well.
No, definitely. I must say that they are keeping Ford in some of their other locations, which do include the Ford Birmingham, Ford Shirley, and Ford Redditch. So, they do represent Ford as a brand across the organisation. But as you say, there is a strategic move for them to put Geely into that specific location going forward.
And hot on the heels of that, in Car Dealer, headline, family-run TC Harrison ends Ford sales at Stamford site as new KGM deal gets underway. So, having said that, this is pretty unusual. We're seeing two very similar stories in the same week, but both related to Ford and TC Harrison. As a group, very much synonymous with Ford. They've been representing Ford for many years. In fact, in the story, it says they've held the Ford franchise since 1936. So they're not getting out of Ford totally. But they are with this particular site in Stamford, where they've replacing it with KGM, which, if that's an unfamiliar name, that's the car maker formerly known as SsangYong.
Yes, yeah, and they seem to be getting a bit of a growth now back in the UK, aren't they, under the KGM brand there? So yeah, it's a shame that Ford are losing a couple of those open points, aren't they, to some of the I say new entrants. I'm not sure how I suppose KGM is new in terms of a name, but not necessarily SsangYong as a brand there. But I think they're quite positive. There's a quote in here from Billy Fitch, who's the divisional director for TC Harrison, said that the change, they are looking forward to embarking on a new journey with KGM in Stamford there, and that they've been looking for a suitable partner at this location, and they believe that the new venture will complement their ongoing commitment to service their current loyal Ford customers, whilst also providing an exciting new brand for the Stamford area there. So yeah, it seems to be quite a few changes at the minute.
Yeah, definitely, and it's going to be fascinating to see how this one pans out, and whether we start to see other legacy brands being replaced at certain locations by newer names.
So to say, lots of headlines this week. It's not slowing down. The redress continues to change and challenge, etc. So we'll keep an eye on that one. As we said right at the start of the show, don't forget to tune into the current trade and retail value special podcast there with Rupert Pontin, who's head of insight communications at Brego. That's the first of many going forward for the monthly view of the market. And as we said, on the 14th of April, we did catch up with Graham Potts, who's CEO of Eden Motor Group and the chair of the IMI. It's a great conversation with Graham, and do listen to that if you do get the opportunity. You've not listened to it already.
But that's all for now. So many thanks to you for listening to this Motor Trade Radio podcast. Do enjoy your bank holiday weekend, and until next weekend, it's goodbye from me.
And goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors and Cazoo. We'll be sharing all the URLs from this week's headlines in our newsletter on Monday morning. To subscribe, just search LinkedIn for the Motor Trade Radio podcast.